Hello Wolfpack, I thought I'd do a quick little THORChain update here, a little Rune update, because Rune has been looking pretty good. It looks okay. We've got, over the course of this, basically the last half of 2021, the second half of 2021, we formed this kind of symmetrical triangle kind of formation here in which we're seeing higher lows but also lower highs, and obviously this relies on Bitcoin's recovery. Okay, so everything I'm going to say in this video relies on Bitcoin's recovery, but I'll go over some scenarios here for THORChain for Rune, and what we're kind of seeing here on Rune is the second bounce off of the bottom support line. We're seeing a little bounce up, and some would say that that is a very bullish thing, right? Some would say it's a very bullish thing, and the next logical step based off of this is a retest of the top line, right? Whether we break through or not is a different story, but at least a retest, right? That's the next logical step, and that could come through various ways. That could come through an altcoin season, that could come through Bitcoin recovering, it could come through just THORChain going off by itself, but you know, the most likely scenario in which it does see that recovery is through a recovery on Bitcoin, okay? So, you know, THORChain, you know, on paper looks okay. And we can look at some indicators here, and we can take away the VVPR. It's not really relevant to this video, but bringing up some indicators such as the 50-day SMA and the 200-day SMA, we can see that THORChain is giving us a pretty clear area in which we need to be buying into it, okay? So it's telling us where we should buy, essentially. So the bull market support band, the Ichimoku cloud, right, the bottom of it, and the 50-day and the 200-day SMA are all currently chilling or sitting below around $9.70, okay? So if THORChain can convincingly break over $9.70 over the bull market support band within the Ichimoku cloud, that is going to be a buy signal for THORChain, because that is going to suggest that we will continue the rally all the way up to the top of this red, I'm going to call it a symmetrical triangle formation, even though it's not really, okay? That is kind of a scenario that I'm looking at for THORChain. When it breaches $9.70, that would be a buying signal. Until that point, you'd be exercising caution for a few reasons here on THORChain. And one of those reasons would be the fact that, well, although we've seen a bounce off of this bottom red trend line here, we have actually formed a bearish bat formation. Not many people rarely know what a bat formation is. It's essentially when you see something that looks like a W formation, but with one side of a W a lot lower than a lot higher than the other, and that's a bearish bat formation. If you see it the other way around, that's a bullish bat formation, right? And you can have it also in an M shape, right? So that's a bullish bat formation, and then the other way would be a bearish bat formation as well. So bearish bat formations are something, or bat formations in general aren't really commonly used, and that's because they're a little bit less accurate than things like double bottoms and double tops, right? They don't play out as much, but they are still slightly convincing, and I think that, you know, for example, a good example of a bullish bat formation would be the one we had, and let's remove all of this stuff here so we can get a clear look, is the one we had back here in June. We had the left side of the W a lot higher than the right side, which is the bottom, and that's a bullish bat formation. You can see that's reversed this time with the left side being a lot lower, and hence it's a bearish one this time. So that is something we need to be keeping an eye on, right? If this was a double bottom on that support line, something like that, right, it would be a different story, but it hasn't actually been that. It's been a bearish bat formation, and for that reason, right now wouldn't be the buying zone for me. I'd be waiting for confirmation above all of these resistance areas, because they still are very strong resistance areas, right? You know, to kind of just conclude this early that, oh yeah, we're going to go all the way up to this red line at like $15, you know, way too early to say that for sure. We need to be breaking this resistance. We're still below basically every single critical resistance. But, you know, the weekly chart is kind of telling us that, hey, it doesn't look too bad. And even going back to the daily chart, we can look at the kind of indicators down here. The RSI, it's not really anything notable happening there, to be honest. What I would say about the RSI is that we're pretty close to forming a hidden bearish divergence here on the RSI. If this comes up a little bit more, we will be forming that. However, the stochastic RSI, you know, again, very situational. You know, we've seen a bullish MACD cross still trending upwards on the histogram, so kind of mixed signals there from a daily chart. As for the weekly chart, we look kind of good on the weekly chart here. We have the stochastic RSI bottoming out entirely. We're primed for a bullish MACD cross, and nothing too important is really happening on the kind of normal RSI there. But you know, essentially, more bullish than not. And, you know, looking at some of the indicators on the weekly chart, it kind of just further instills that we need to be waiting for $9.70, right? We've still got, you know, just adding to all the stuff that's happening around that region on the daily chart. On the weekly chart, we also have the 50 SMA, we also have the 12 SMA, and the 26 SMA as well. And the Ikomoku cloud also will be pushing down into that region by the time we get there. So, you know, $9.70 somewhere in that region is definitely the area in which, if we conquer that area, that is going to be a strong buy signal for Rune. And from that point, let's just find out where it is here, around here, right? A little bit lower, actually. We're looking at, you know, probably at least a 50% gain into the top of this symmetrical triangle, where you'd be selling for sure, right? You wouldn't want to be waiting and seeing what's going to happen. If it breaks out on a longer term scale, you might be buying back in on the breakout, but you'd be selling upon the retest of the top if we get there. So the ultimate premise, the ultimate takeaway point of this video, before we look at the Bitcoin pair from the USD chart, is buy at $9.70, and kind of just, that's going to give you a really good risk reward ratio. Obviously, you can set your stop losses a little bit below that as well, depending on where the support zones are. So if we break $9.70, you'd be setting a stop loss below the bull market support band, wherever that may be at that point. It wouldn't be too low. You'd be risking maybe 10% for a gain of 50%. So very good risk reward ratio if you're waiting for that point here. What I'll say about the Bitcoin pair is we're seeing an uptrending line that's held for support on the Bitcoin pair since early 2021 as well, and that's maintaining its strength here. And we've just bounced off of that about 3 weeks ago, and we're bouncing to the upside, which would suggest that we might be breaking above these regions on the USD pair, and hence reaching that $9.70 region. So the Bitcoin pair looks okay. The USD pairs look mixed, but if we do break $9.70, that's going to be a very favorable trade signal. Now, if we head downwards on Rune here, if we head downwards and we come back down to the bottom line here, the support line, you'd probably wouldn't be too, you know, it wouldn't be too idiotic to buy on this support line here and set a stop loss literally 5% below, right? You're risking a very, very small amount for at least a little dead cat bounce there, because that support line is held for a substantial period of time, and there's no reason why it wouldn't hold again, at least very, very briefly, right? So yeah, so $9.70, that's a buy signal. If we come down to the support line again, that's a buy signal for a very short-term trade if you have a tight stop loss, because if we come down again without testing the top, that means this pattern of zigzagging is broken, and it means that the most likely scenarios we'll probably see something like this, where we test it, bounce up a little bit, but ultimately fall through, right? So you'd buy, but you'd be well aware that the downside risk is there, and set a tight stop loss and try and cop maybe a 10 to 15% gain. So ultimately, the reason why I'm pointing this out to you guys is not really, you know, amazing kind of material here, amazing kind of you know, charting, is because I see a formation here that is profitable for both scenarios, and I wanted to outline that to you, and that's what it's all about here, because, you know, there's no point in me making a prediction. The market is pretty clearly in a very unstable place right now. What I'd rather do is point out both scenarios like I've just done, and give you a profitable trading plan for both of those scenarios, so no matter what way it goes, you're going to make profit. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.